Today, let's take a look at Topic 9, Commercial Crime Insurance. The crime loss exposures can be very different from different policyholders' need, and therefore the crime insurance can involve specialized underwriting skills. Therefore, insurance companies have devised specialized commercial crime insurance forms that will allow organizations to cover many crime exposures that are either not insured or are specifically excluded under its other insurance policies. As you may all remember, insurance policies actually has something called insurance period. Usually, insurance policy only cover the loss that are incurred during the insurance policy. However, if we talk about the commercial crime, sometimes it's difficult to know whether the loss will be covered. And therefore, there are two versions of discovery form and loss sustain form that are specifically attributed to the time when the crime is happening. So under the discovery form, it covers the losses that are only discovered during the policy period. So the crime may be committed before the policy period. However, as long as it is discovered during the policy period, it will be covered. To the opposite, the other type of policy form is the loss sustained form. Under this form, the covered losses would need to be actually sustained during the policy period. Now, as you think of it, it's extremely difficult to know whether the loss is actually happened during the policy period because of the nature of certain crimes. You may never know exact time when the crime happened. So the loss sustained form has constricted that it has to be discovered no later than 1 year after the policy expiration. Now, you can imagine there is some way to get around the discovery form. For example, if you know there is a crime that exists in your firm, however, back then, you do not have any commercial crime insurance coverage. Now, it will be very tempting to go ahead and purchase an insurance coverage with this discovery form so that you can claim that it actually is discovered during the policy period, where actually it was discovered a long time ago. Also, therefore, discovery form is not as popular as loss sustained form from the perspective of an insurance company, because sometimes it's hard to control the underlying moral hazard issue for the discovery form. Inevitably, a lot of commercial crimes indeed, are actually due to employee theft. So in order to understand employee theft, we'll first need to verify what makes a person to be a legitimate employee. So for a person to be considered as an employee, he or she has to satisfy the following three identities. First one is this person must be currently employed by the insured or an ex-employee whose employment ended within the past 30 days. So basically, if this employee has already left the firm, then the employee would no longer be considered as an employee after a month period. And secondly, this person must be compensated by the insured by salary, wage, or commission. So any type of compensation would also be one of the characteristics of an employee. Thirdly, this person must be subject to the control and direct of the insured. A very interesting aspect of the commercial crime insurance is the limit of insurance. Its limit is subject to a certain occurrence. So what does that mean? For example, for a cashier who has been continuously stolen money from the store for the past 10 years. Now, even though it's a long period of time, 10 years, it is still considered as one occurrence, and therefore all the money from the past 10 years that has been stolen by the employee at that time will be subject to only one insurance limit. So we said that a series of acts committed by the employee acting alone or even in a collusion with the other person is still considered as one occurrence. The next commercial crime insurance coverage we're going to talk about is the forgery or alteration. Now, it is not difficult to understand. However, you need to understand that this only covers the loss resulting from the forgery or alteration of the insured's check, draft, and so forth. So it does not cover the losses resulting from the insured's acceptance of a forged check and so forth and others. So here's the question. Why not? Why not the insurance company cover the loss that is resulted from the insured's acceptance of forged checks? Think about it. This specific sentence actually tells us that it is trying to avoid the moral hazard problem. Think about it. If you have insurance in existence that will protect you against any loss due to the fact that you accept the forged check and so forth, would you have any incentive to verify whether the check is genuine or not? Probably not, right? Because it's covered anyway. And therefore, it creates a lot of moral hazard issue that insurance company will tend to avoid. And therefore, insurance company will say that we're not going to cover any loss that due to your negligence to accept the forged checks and so forth. The next coverage that is provided under commercial crime coverage will be the inside the premises theft of money and securities. It's very easy to understand. Basically, the loss need to happen inside of the premises that is written on the front page of the insurance policy. And this coverage is covered against a broad scope of perils such as theft, disappearance, and destruction. The other type of inside the premises coverage is the robbery or safe burglary or other property. Think about it. If you're a bank, other than your money and security, you still have other properties inside of the bank. So it covers other properties inside the premises against robbery and safe burglary. Now for financial institutes, their money, their securities, their assets sometimes may not even be inside of the bank. For example, what if you're transferring your money from one bank to another bank? Now, there are multiple ways to do it. You could have a messenger or have an armed vehicle to transfer the money from one bank to another one. Or even better, you can have it wired to another bank or have it transferred through computer. So due to these transactions, commercial crime may happen. So we have the following three types of commercial crime coverage. First, outside the premises, it covers the money, securities, and other property while they are outside of the premises and in the care and custody of either a messenger or an armored vehicle company. And nowadays, a lot of the banks are transferring their funds overnight through computer. And so the computer fraud insurance agreement has emerged that covers the loss due to the use of computer to fraudulently transfer covered property to the wrongdoer. Finally, there's this funds transfer fraud. Now, you have to be very careful the difference between the computer fraud and funds transfer fraud. Technically, computer fraud sometimes can use computer to transfer funds. However, funds transfer fraud would not cover any loss resulting from the use of a computer to fraudulently transfer money. Now we know that today a lot of banks, a lot of financial institutions, or even individuals transfer their funds through computer. And therefore, most insurers that purchase funds transfer fraud coverage should also purchase the computer fraud coverage to obtain a more complete protection. There are 6 additional insuring agreements of the commercial crime insurance. They are namely lessees of safe deposit box, securities deposits with others, guest property, destructions of electronic data and computer programs, unauthorized reproduction of computer software by employees. So let's take a look at one after another one. First, the lessees of safe deposit box. When you go to a bank, you could choose to have your belongings, your properties, personal properties, to be safe in a safe deposit box that is offered by the bank. Now, as you think of it, this constitutes a Bellman relationship. Under this Bellman relationship, the bank will be the bailee and you are the bailor who owns the property. In order to protect themselves, the banks will have it covered under the bailee coverage. However, if the item is lost, you need to prove that it is the bank's fault that your item was lost. So to recover from the bailee coverage that insurance company, the bank has purchased, and therefore the lessees of safe deposit box insurance agreement will be very popular among customers that uses the safe deposit boxes. So this coverage enables the customer to recover from his or her insurance company from losses to covered property without having to prove that the bank has a liable for the losses. The guest property coverage followed the same rationale. So due to the Bellman relationship between either hotel, motels, and bed and breakfasts with their guests, this Bellman relationship constitutes because now the hotels become the bailee and the property owners, their guests, become the bailor, and technically the guest property should be able to cover it under the bailee coverage. However, what about if the bailee's coverage do not cover enough? So the hotels, motels, and bed and breakfasts choose to have their guest property covered under this guest property, so that it covers the loss to the guest property for which the insured is legally liable. And of course, it will subject to applicable exclusions. Another type of additional insuring agreement would be the destruction of electronic data and computer programs. Now, from the previous chapters, we know that electronic data, computer programs, sometimes they can be covered from the covered peril. Now, what are usually considered as covered peril under the regular commercial policy? Fire, wind, right? So if there is no physical damage to the computer itself, the consequential loss of electronic data will not be protected. However, we know that most of the time the electronic data can be lost overnight or in a minute due to computer virus or by vandalism such as hackers. And therefore, this destruction of electronic data or computer programs will protect the insurers from these perils that are usually not considered as regular perils under the commercial property insurance. As always, there will be exclusions. There are 3 types of exclusions under the commercial crime coverage form. They're general exclusions, exclusions applicable only to employee theft, and exclusions that are applicable to computer fraud. So first, general exclusions will include the acts committed by you, of course, your partners or your members, or either government action, war and military action, and so forth. So these are general exclusions that will be excluded pretty much everywhere in the commercial insurance. There are some exclusions that are applicable only to employee theft that include inventory shortage, trading, and warehouse receipts, So the loss of warehouse receipts or inventory shortage would not be covered under the regular commercial crime insurance. In addition, there are exclusions applicable to inside the premises and outside the premises that include accounting and mathematical error or omissions, exchange or purchases, fire. And there are exclusions that are applicable to computer fraud, including credit card transaction, funds transfer fraud, and inventory shortages. So most likely, if it is unexplained inventory shortage, it would not be covered. As we said before, whether a specific loss is covered under the commercial crime insurance depends on whether the loss is incurred during the policy time. So there are two definitions of whether the loss is incurred during the policy period. First, there is loss sustained form, and under the loss sustained form, the occurrence is defined as causing the loss must take place during the policy period, and the named insurer must discover the loss during the policy period or during the period of time provided by extended period of discussion loss, which is usually 1 year condition. However, under the discovery form, the loss must be discovered under the policy period or during the time period provided by the extended period to discover loss, and which is usually 60 days. So as you can see, this type of requirements, loss sustained or discovered, only have the impact of employee crime, because for the other crimes such as theft, burglary, most of the cases you will discover almost the same time when you sustain the loss. So therefore, these two types of forms are usually try to specify whether the underlying employee crime is covered or not. So as we said before, there could be potentially a loophole for the discovery form. For example, if I already knew that I have a loss today, so tomorrow I go ahead and purchase commercial crime insurance with discovery form, hoping that I can claim that I actually discovered the loss during the policy period, which do not exist currently. And in that case, insurance company will have to pay for the loss, whereas I already know that I have a loss. So that creates a lot of moral hazard issue. Due to that fact, insurance company would put a retroactive date endorsement to the discovery form, so that when a retroactive date is added to the discovery form, the insurance company would not cover acts committed before the retroactive date stated in the policy. So as for the previous example, I discovered the loss today and I try to hide it, pretend I did not discover it. Tomorrow I go to an insurance company and purchase an insurance coverage with discovery form. In the month, insurance company decided to provide me with a coverage, and the next day after that, I claim that okay, I discovered a loss. It's a moral hazard issue. So the insurance company will put a retroactive date as the date I apply for the insurance coverage, or they may not do the specific date but most likely they'll put a retroactive date to the date I apply for the coverage, so that I would not be able to take advantage of this loophole. Just as most of the commercial insurance, there are conditions for commercial crime insurance too, and there are three groups of them. There are conditions affecting employee theft, conditions affecting interests insured, and conditions affecting claim handling. First, let's take a look at the conditions affecting employee theft. This condition affects employee theft in the following aspects, including territory, the time limit, and employee benefit plans. So the territory condition verifies that the commercial crime only covers the act that is committed inside of United States, Puerto Rico, or Canada. The time limit, which is called the termination as to any employee, defines that the commercial crime only covers the losses before the discovery of an employee. What does that mean? So basically, as long as the employer, either a partner, an officer, a director, either one of these persons discover the dishonest of the employee, the commercial crime coverage will cease. So any loss occurred after the discovery of the dishonest act would not be covered. And finally, the commercial crime insurance can eliminate the need for ERISA compliance endorsement. Here, ERISA stands for the Employee Retirement Insurance Security Act. So for any fiduciary employer with employee benefit plan, they'll either manage the plan themselves or hire a third party to manage the plan. Now, due to the effect of employee benefit plan, the employer will need to have a bonding toward the plan. So the plan assets need to be bonded. However, if you have commercial crime insurance in existence, then you do not need to satisfy the ERISA compliance endorsement because any dishonest act towards your pension fund is going to be covered under the employees dishonest act that will be covered under the commercial crime conditions. The fourth condition that will affect the interest of the insured is the joint insured condition. The joint insured condition has the following aspects. First, all the insured under the joint insured condition are considered as one insured entity, and therefore, any named insured will act not only for itself, but also for all the other insureds. Additionally, if any of the insured, including partner, member, or officer of the insured, has any information with the insurance, it would then consider to be the common knowledge that known to all the parties of the insured. The second aspect of the joint insured condition would be that all the insured will be protected under the commercial crime insurance. What does that mean? Let's take one example. For example, Apple has an outsourced company in another country, not in the United States. So that company that Apple used to outsource actually has employees. Now those employees are considered to be employees of that company instead of Apple. So Apple actually do not have any control over the employees, and therefore technically Apple cannot purchase any employee crime insurance against those perils. With the joint insured condition, Apple can have itself protected under the scenario when it is outsourcing its business to some other countries. Now, there are certain conditions that will affect the claim handling. First are the duties in the event of loss. So basically, these duties will be performed for other causes of loss too. First of all, you need to notify. If it is commercial crime, you not only need to notify the insurance company, but you also need to notify the authorities such as police department. Also, you need to submit an examination under oath signed statement of answers, which is common for all other kinds of insurance, and you need to produce all pertinent records and also give the insurer a sworn proof of loss within 120 days. You also need to cooperate with the insurance company in claim investigation and settlement, which is very common for other insurance, and also you need to notify the police, as we said before, if it involves a violation of the law. as usual, we always have this other insurance condition. So if a commercial crime insurance is written as primary insurance and there is another insurance involved, there are two scenarios. The first scenario would be the other insurance is subject to the same terms and conditions as this insurance. So basically, put it to an extreme. What if the underlying insured has two commercial crime insurance, identical commercial crime insurance in hand? What would it do? In this case, the insurance company's obligation will be limited to a pro rata share of the covered loss, which is easy to understand. The second scenario would be the other insurance is not subject to the same terms and conditions as this insurance. So maybe the underlying loss is only partially covered by the other insurance or subject to different kind of exclusions. What would the insurance company do in this situation? Well, in this case, the insurance will pay a part of the loss that will exceed the bigger of the following. First, the sum of the limit of insurance and deductible amount of the other insurance. And second, the deductible of this specific crime insurance. So insurance company will only pay the loss that exceed the larger of the underlying two. What about the settlement condition? The insurance company agreed to pay the valuation depend on different kinds of loss. If the covered loss is due to a money loss, then the insurance company is going to pay the face value of the money, of course. And if the underlying loss is the loss of securities, then the insurance company will pay the market value at the closing of the business on the exact day when the loss was discovered. So not necessarily the day when the security was lost, but on the day when the loss was discovered. Because most of the cases, it's hard to verify on what specific day the loss did occur. What if the loss is to the damage to a property, then the property is paid on a replacement cost basis. So here's one question which is very easy. Replacement cost versus actual cash value, which is used most common in commercial property insurance. Well, actual cash value is used as most common, and it can be altered into a replacement cost. So replacement cost is usually higher than actual cash value. Government crime can also be severe. As commercial crime coverage, government crime coverage also has two different kinds of form, the discovery form and loss sustained form, and consequently will have two types of government crime policies, the discovery policy and the loss sustained policy. And as you can imagine, the discovery policy covers the loss that is discovered during the period of insurance period, whereas the loss sustained coverage covers the loss that actually happened during the insurance period. In many aspects, the government crime form are very similar with the commercial crime form. So we're only going to talk about the difference between the government crime form with the ISO commercial form. First of all, the government crime form contains an optional additional employee theft insuring agreement. So for the typical commercial crime form, we know that the coverage only covers one specific loss. So we have previously an example saying that if a salesperson has stolen money from the company for consecutively 10 years, and even though that is during a long period of time, it is still considered as one crime. And also, if it is two employees or three employees colluded together to steal money away from the company, it is still considered as one particular loss, and therefore will be subject to only one policy limit. However, for the government crime, you can have an employee theft insuring agreement that applies on a per employee basis. So each of the employee has their own policy limit. The other difference would be the territory condition. Now we know that for commercial crime insurance, it covers the geographic territory of the United States, Canada, and Puerto Rico. However, for government crime, it only covers on the United States territory and also include Puerto Rico. However, this territorial condition would not apply to the forgery or alteration of the computer fraud, because these type of crimes such as forgery, alteration, and computer fraud, they most likely is going to happen somewhere outside of the United States, and therefore the territory condition would not put a restriction on this type of crimes. So it will cover this type of crime on a worldwide coverage. The third difference between the ISO government crime form and the ISO commercial crime form is the termination as to any employee condition. If you can still remember, under the ISO commercial crime form, the underlying insurance is going to terminate as long as the employer discovers the dishonest act of the employee. Now, the government crime form put a more strict termination on this one. So not only the officer, any type of employee that is authorized to manage or control the insured's employees would trigger the termination of insurance coverage. So for example, the knowledge by a supervisor who is not an officer would not trigger automatically the termination under the commercial crime form. However, if under the government, any officer, even though they are not supervisor or a supervisor who's not an officer, knows about the underlying crime, it will trigger the termination of the government crime form. The fourth difference between ISO government crime form and the ISO commercial crime form would be the two additional exclusions. These two additional exclusions will eliminate the coverage for loss caused by any employee required by law to be individually bonded or any treasurer tax collector. So with government crime form in force, you don't need to go ahead and purchase additional coverage for the losses that due to these two perils. The last difference between the government crime form and the commercial crime form would be the indemnification condition. So under certain government programs, the officers are responsible for the crime that are committed for their subordinates. So their officers can go ahead and purchase this crime form to protect themselves against the losses that is committed by their subordinates. And therefore, these are the differences between the ISO government crime form and the ISO commercial form. And here concludes this chapter of commercial crime insurance.